Markets in Rwanda were silent on Monday, with the Rwanda Share Index and All Share Index remaining unchanged to close at 109.1 and 147.44 points, respectively. Siongo Kisoso, head of investment banking at BK Capital, spoke to CNBC Africa's Julius Bizimungu.
In terms of equity trades, last week was relatively quiet. About 4 million franc was traded in BK, BRALIRWA, and INM. In terms of price movement, we only saw a 3% gain in BRALIRWA. All other counters remained the same price as the previous week. So this represents 0.6 gain on the RSI and 0.1 gain on the All Share Index. On the bond side, in terms of the secondary market, we had 300 million worth of bonds being traded, which is and has become the typical sort of value that you see on a week-on-week basis. In terms of the primary auction, we do see some initial reaction based on the MPC's movement of interest rates. So on the interbank, looking at money market rates, last week trades came in at 50 basis points higher. Looking at the T-bill primary auction, the 28-day T-bill and the 91-day T-bill increased by approximately 50 basis points. And we saw more subscriptions going towards, shorter tenure instruments. I think which really indicates that, the investors in money market instruments are bracing themselves for an uptick in interest rates in the near future. So that's what money market and bond market and equity markets looked like last week.
You would say that probably because last week, Monday, was a public holiday, so we didn't see any trade happening. But also on Friday, we saw the equities market. Equities market did not register any movement. But when you look at the fixed income market, seems to be a little bit active compared to the equities market. What explains that?
I think it's twofold. One, we're seeing a lot more institutional investors coming in to trade in the secondary market and take advantage of pricing mismatches or pricing opportunities. That's one. And then two, on the banking side, we're seeing the growth in lending hasn't picked up the same way as the growth in the economy. So, banks are more liquid and are looking for opportunities outside of the primary market to increase the yield on the asset book.
3% gain for BRALIRWA. The price change, it seems to be BRALIRWA remain one of the best performing stocks so far. But when you look at the general trade on the equities market, you're still looking at BK, Bank of Kigali, but also INM, trying to register some good, in terms of volume, some good movements. Why do they remain the best performing stocks at the moment?
In terms of these two being the best performing stocks, I'd say the thesis around them is income driven. You look at BK, you look at BRALIRWA, both of them are trading at dividend yields of over 10%. And if you look at the total return, income return of INM, so that would be the dividend plus the bonus issue that they gave, that return is north of 10%. So a lot of the trading right now is being driven by an income thesis that these counters have.
Let me ask you about the recent MPC decision, because I want to understand how investors weighing their options, especially following the MPC hike of the policy rate from 5% to 6%. What was the reaction?
I would say that the immediate reaction was a lot of investors moved into shorter term securities. So if you look at the subscription of the 28-day T-bill and the 91-day T-bill, the percentage applied within those was much higher. Actually, the 364-day T-bill was undersubscribed, which is not very common. And we saw price increases within these two very short tenor money market instruments, which shows that there is demand to keep money short term, to brace for further increases in interest rates further down the yield curve. On the interbank side, the rate moved to about 6%, 50 bips higher than the week before, really showing that the signal of an increase in interest rates is being taken up by financial institutions locally.
One other development I want to talk to you is we saw last week the Prime Minister launching or unveiling the first major compressed natural gas plant on the shores of Lake Kivu. What does this mean? What do you think is the significance of this, especially when you look at an environment where we are currently operating with fluctuations, especially in oil and gas at the moment?
Okay. No, I think it's a positive step forward. It's great for the environment. I'd say that as a starter, the expectation is a lot less biomass fuel, so that is in the form of charcoal or wood, etc. would be used. So big plus for the environment. In terms of the cost of energy, we expect that to drop as well. If you compare the cost of diesel versus the cost per unit of diesel versus the cost per unit of CNG comes in about a third cheaper. If you compare the cost of CNG per unit with wood or other alternative biomasses, there are savings there. So we would expect, the cost of production eventually would go down. The environment will benefit from the use of CNG. But I think, with these benefits, we have to bear in mind that the adoption period might take a while. So, vehicles, industries would need to retrofit, their intake of energy. And I think that may take a bit of time, but definitely medium to long term, cost of production will go down, and consumers and producers of goods should see the benefit of this.
I mean, inflation being one of the pain points for everyone at the moment, do you see CNG becoming a hedge against inflation in the long term? I mean, as you said, the adoption is going to take a while, but in the long term, do you see that being a hedge against inflation?
No, certainly. If you look at the contribution of fuel to sort of the basket of goods that determines inflation, being able to find alternative sources that are cheaper, that are more stable in price, in the medium to long term should stabilize inflation to some degree.
As we conclude, you're seeing some of the best performing stocks whose companies, I&M and BK Group, going to release their earnings this week and next week. What are your expectations in this case?
Looking at other banks in the region, the expectations is that PAT growth will remain strong on the back of growth in interest income, which is twofold, One, the net interest margins have been expanding due to the increasing interest rates, and two, there has been some growth in the volume of loans. I'd say that will be one contributor to the growth in PAT. Secondly, non-funded income in the form of FX revenue would increase given some of the increases in rates and volatility. And then thirdly, provisions have been going down following some of the coverage that was put into the P&L due to COVID. So those are some of the I mean, those are so those are some of the expectations we'd have. But what we are also seeing is that banks are becoming a bit conservative in terms of interim dividend. Stanbic in Kenya, Standard Chartered in Kenya, both held back on issuing dividends to manage capital, and we'd see this, and we're likely to see this happening across a number of other banks that have given interim dividends in the past.